Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago soybeans. There continues to be two patterns on this daily chart. One broken, repaired, broken, and repaired again, and one breached and swiftly mended. The two patterns are: one, the recent main showrunner for this market since August last year, the dark blue December 24 to August 25 bullish Andrews pitchfork. The market now in between the dark blue lower tie and below, currently 1192.5, and the dark blue middle tie and above, currently 1311.5. The very recent move up was from a small end July to start of August double bottom pattern, and that was an Eve and Adam type, gapping up over the dark blue lower tie 2 weekends ago and reaching both the primary and secondary targets for this pattern. In the process, the market formed a weekly key reversal up 2 weeks ago and been seeing the follow-on from that. Now, we could look at last week as a possible hesitation, in a bullish halfway hesitation, but I am suspicious of that idea right now, despite yesterday's move higher. I'm not saying it won't happen, just that it does look a little flimsy right now. This leads me to the second pattern, the early January to late June bright red bullish Andrews pitchfork. Prices here are in between the bright red lower time below, currently 1177.5, and the bright red middle time above, currently at 1309 3/4. Prices today are over the congestion seen back in March, mid-May and late July between 1238 to 1238 3/4 to 1243 even, as well as over further congestion between 1252 3/4 and the May 24 high at 1256 1/4. And looking intently at the next significant resistance, which is the 50% Fibonacci line of the big May 19 to February 22 move at 1275. Beyond that, we have mixed congestion just under 1290 even, and then the old gap between December 23 to January 2024 between 1290 3/4 to 1296 3/4. We have so far managed yesterday to make the highest high and high close since January 2024. I said the following last week, and it's still very relevant today, and I quote, "Now, though these two pitchforks are not directly related, we nevertheless have a crossover of times on around the UK bank holiday on the 31st of August. So please just be aware that we may see volatility around this time. The next one after this is the 22nd of September. To give you a reason to consider this, the earlier one was on the 10th of August and the recent low was the day after on the 11th of August. End of quote. So please be very aware this coming weekend and early next week." Chicago soybean meal. This week we are now down to one single main pattern here. It's the early January to mid-June bright red bullish Andrews pitchfork that has pulled higher from being tested on the downside 2 weeks ago, breaching the bright red lower time below, which is currently at 313 even, but failing to establish itself down there and pulling back upwards enough that we are today testing the bright red middle time above, currently at 336.40, and significantly closer to the important overhead 61.8% absolute Fibonacci line at 336.30. To reach this high, we have seen prices rise and overcome the congestion between the 50% Fibonacci line of the May 24 to July 25 move at 326.20 to the congestion at 326.90, as well as the November 25 high at 333.5. However, the next major roadblocks overhead still remain that 61.8% absolute Fibonacci line at 336.30, as well as this year's high at 338.70, plus the next major high from October 2024 at 350, 160. This all now makes me think that perhaps, just perhaps, the whole mid-May today action may be a type of double bottom, possibly an even Adam type. This requires a lot of squinting at the charts, but it might just be so. In which case, we would only look to possible targets on a confirmed move over both the 61.8% absolute Fibonacci line as well as the bright red middle line. So no targets as yet on the top side, but I can give you some potentials. Thus, a primary potential, should this all come about, would be in the 358 even area. Whereas secondary, harder to reach potential up in the 366.5 area. And these are quite radical targets topside, though they would still just about be within the bright red bullish Andrews pitchfork, as well as still below the 2023 close. Now, why do I note this close for 2023? Well, this segues in nicely into a timely reminder of a piece, indeed, a final point, which this commentary would not be complete. And that is something I've included in my commentaries, all of them now, for 169 weeks, so for well into 3 years. It's to do with the annual key reversal seen here at the end of 2023. I said back then, and I quote, "And I only need to remind you once again of my words when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down." This duly came about at the end of 2023, and we have been living in the shadow of this pattern ever since. End of quote. I've also added ever since, and I quote, "If there is one thing you take away from any of my musings, let it have been those words." End of quote. For 3 years, a shadow of that pattern has darkened the skyline of this market ever since. I have wondered if prices were now finally sending that shadow into oblivion. Right now, well, I'm not sure, but there is an opportunity, but please don't hold your breath for it. We are still, with all these moves, still significantly below the close of 2023. Chicago soybean oil. There is one pattern here that has defined moves higher this year, even when it was being thoroughly tested. It is the bright pink March to August 2025 bullish Andrews pitchfork. The market today still in between the bright pink middle time overhead, currently at 70.85, and the bright pink lower time below, currently at 61.97. Recent action has seen a drop from a bullish shift pitchfork, becoming the market lodged in amongst some congestion between the July 2008 high at 67.14 up to the July 23 high at 69.12, before rising up to the bright pink middle time last week, embracing it even, but not able to overcome it. And prices have dropped back down to that 67.14 to 69.12 congestion. We're in that at the moment, though we are looking to make a possible daily key reversal today. Now, we've pierced on the downside that congestion, but we're not closed below it, though that may possibly change, obviously, anytime today, with an open ever so slightly underneath it, but we've had a major move back up again. The market did drop into below what we have is a fairly free zone, all the way down to the rising gold long moving average, currently at 63.93. Now, I drew 3 weeks ago a new pattern, which, as I said at the time, and I quote, "may or may not help," end of quote. It was a start of June to mid-July bright green bearish Andrews pitchfork. This initially looked useful, but I've fallen out of love with it and have instead finessed it to a shallower bright green bearish shift pitchfork that you can see on my daily chart. I still reserve the right to reinstitute this more acute bearish Andrews pitchfork in case I find it works better and at some point in the future. Right now, the market is in between the overhead bright green middle time, currently at 68.23, and the bright green lower time below, currently at 62.70. This finessing is something I warned about last week. Now, the recent actions over mid-July today has brought to my mind whether to regard the whole action over that time as some form of bearish halfway hesitation or not. It is touch and go on such a pattern. But if it comes about, then you might start to look at potential, not targets yet, obviously, but potential down in the mid 63 even zone. This would placate, or place it actually, well within a seeming strong congestion zone, topped by the rising gold long moving average, and as a base the lower pink Andrews pitchfork, containing not just these but other tines as well as significant Fibonacci levels. So this is an idea to watch. This brings me to a point I've been making here now for a few months when I said, and I quote, "I think for this market the question is not whether the market is bullish or not, but how bullish does this market choose to be?" End of quote. This is now the 14th week and the bullish incentive continues to be dampened, and I further continue to wonder if there is a existential bearish threat developing here.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.